Hi everyone, Nancy Godrat here. I'm going to use this time to go over examples of Chapter 1, transactions and how they are affecting the expanded accounting equation. So in this transaction, the company has purchased supplies on account, on credit or on account, mean the same thing. In this case, the company used its credit card to purchase the supplies, therefore they did not pay cash. Now, supplies is an asset, therefore our assets increases by 1,600, and since we haven't paid for this asset yet, for this purchase, we have a liability to the vendor, and therefore our liabilities go up, and the name of the liability is accounts payable. If you notice, this transaction affects both sides of the equation. Assets increases, liabilities increase, and therefore equation stays balanced. Unlike the last transaction, which was purchase of equipment for cash, that transaction was increasing an asset, equipment, however, decreasing another asset for the same amount, cash, and that transaction only affected the left part of the equation. So not every transaction will affect both sides of the equation. As long as the net effect is making the equation stays in balance, that is fine. In this case, assets went up and down by 7,000, therefore asset net increase is 0, and the right hand side of the equation, liabilities and stockholders equity, did not affect. Now let's move to the transaction 4, services performed. As soon as you see services performed, if you have read my hints for translating accounting into English, it says every time you see services performed, that means company has service revenue. That's the two words we use. We say services performed, services rendered, fees earned, provided services. All of those means that the company has service revenue. And the customer has paid cash, therefore cash, which is an asset, goes up by 1,200, and service revenue, which is part of a stockholder's equity, also increases by 1,200. So the left side of the equation increased and the right side of the equation increased for the same amount, therefore the equation stayed in balance. Remember, as I mentioned before, every transaction have to at least affect 2 items in the expanded accounting equation, otherwise the equation does not stay in balance. The next transaction is when the company purchased advertising on credit. So Softwhite Inc. receives a bill for $250 from the Daily News for advertising on its online website, but postpones payment until a later date. So in this case, the company has used services of the advertising company. Anytime resources are used to run the operation, to generate revenue, the company has an expense. In this case, the name of the expense is advertising expense, but they haven't paid for it, therefore the company has a liability. In this case, the name of the liability is accounts payable. Assets, the left side of the equation, is not affected at all because they haven't paid for it yet. Now, the effect of expenses on expanded accounting equation is that expenses reduce stockholders' equity, so reduction in stockholders' equity, increase in liabilities for the same amount, therefore the equation stays in balance. Now, you wonder, why do we have to record this transaction even though we haven't paid cash? and you need to go and review the two methods of recording transactions. The one is cash basis, and the other one is accrual basis accounting. And under accrual basis accounting, that is generally accepted accounting principle, requires us to follow, even if we haven't paid cash for an expense such as this, we still have to record it and show that we have a liability. Cash basis is opposite. You only record expenses when you pay for them. And we will not follow cash basis in this course. The next transaction is services provided. Again, services provided means the company has service revenue for cash and credit. So part of the services was, the customer paid us cash, but and part of it still they put on account. What does that mean, on account or credit? Means the customer has created an account with us. We trust them that they will pay us in future, and promises from customer to pay us in future for services that we provided is called accounts receivable. So in this case, cash increases by $1,500, accounts receivable increases by $2,000, so assets increase by a total of $3,500, and service revenue increases by $3,500. So eventually the customer should pay us the $2,000 in future. And you wonder, okay, what if the customer go bankrupt and is not able to pay us in future? We will go over those situations in chapter 8. Transaction 7, payment of expenses. SoftBite Inc. pays. Anytime you see the word pays or paid in present tense or past tense, it means cash was used and therefore cash decreases. So SoftBite pays the following expenses in cash: office rent. So use of the space to run the operation creates an expense, rent expense. Salaries and wages of employees. Employees worked for us, so therefore we use their services to run our operation. That's an expense, salaries and wages expense. And utilities. We use resources of utility company, PG&E, to run our operation. That is an expense for the company, utilities expense. So we have 3 separate expenses. You cannot combine them into one account. You have to show them separately. Why? Because we as the owners and also management would like to know where the money went. In this case, we have cash decreasing by $1,700, and we have 3 different expenses. And I wish this illustration would have showed the name of the expenses next to them, because we do need them later on when we prepare our financial statements. So next transaction, payment of accounts payable. If you remember, we received a bill from advertising company, but we didn't pay it right away. That was transaction number 5. And today is the day that we are going to write a check and get rid of that liability, reducing the liability. So accounts payable shows up as a negative $250, and also our cash goes down by $250. So the left side of the equation decreased, the right side of the equation also decreased. Next one, receipt of cash on account. So if you remember, we had a customer that they owed us money when we provided services. SoftBite Inc. received $600 in cash from customers who had been billed for services in transaction 6. So the customer is paying part of what they owe us. Therefore, company's cash increases by $600. Another asset, accounts receivable decreases by 600 because we mentioned accounts receivable is a promise from customer to pay us cash in future. And today they honored their promise, at least partially. And they paid us $600 of what they owe to the company in form of cash, and the remaining $1,400 they will pay in future. How did I come up with $1,400? The 2,000 minus 600 gives you still $1,400 of accounts receivable we need to receive in cash from our customers. So guys, remember, accounts receivable means we're going to receive cash in future, therefore it's an asset. Accounts payable means we have to pay cash in future. That's why it's a liability. So transaction 10, the company pays, again, pays means cash goes down, a dividend of $1,300 and to the owners, the stockholders of the corporation. So cash decreases by $1,300 and a stockholder's equity is affected. It goes down. Which part of a stockholder's equity is affected is the dividends. Dividends decreases your stockholder's equity. So this company had 10 transactions maybe in the first month, and after all transactions were recorded, we come up with the ending balance of each account, each item, each asset, each liability, and each part of the stockholders' equity. So it shows at the end that the company has cash of $8,050, accounts receivable of $1,400, $1,600 supplies that as of now we assume we haven't used it yet. We will come to chapter 3 when we have to show what happens when you use accounts supplies. And then on the other side, in here it's a little problem of writing. Accounts payable is $1,600, 15,000 common stock, and let's see if I can fix it. No, unfortunately I cannot. So, and then we have 4,700 of revenues, 1,950 in total expenses, 1,300 in dividends. And if we add all the assets, 18,050 is the total, which equals the sum of liabilities and stockholders' equity, meaning the basic accounting equation, assets equal liabilities plus stockholders' equity, is in balance. Now, after we show the effect of transaction on expanded accounting equation, we need to prepare financial statements, and there are 4 financial statements that companies prepare. The first financial statement is called income statement. It shows the revenues of the company, the expenses of the company, and the net income or loss. The second one is retained earnings statement. We will go over that in a separate video. The third one is balance sheet that shows all the assets, all liabilities, common stock, and retained earnings amount. And the last one that has a chapter dedicated to it is a statement of cash flows. This statement is the only statement that is prepared on cash basis, and it shows the sources and uses of cash. It is important to remember the order of the the order of the financial statements, and you have an example for the month of September for SoftBite. Please take a look at it and let me know your questions. I'll talk to you soon.